The subprime crisis, initially a real estate crisis, spiraled into a global catastrophe. But how did this occur? It started with the Federal Reserve raising interest rates too rapidly and excessively. Banks, on the other hand, were recklessly lending money to insolvent individuals. These two factors created a precarious and shaky foundation for the American economy, setting the stage for the imminent crisis. Now let's talk about the third actor, George Walker Bush, who did something unfathomable. The general belief was that small banks could collapse, but big ones like Lehman Brothers wouldn't. People assumed that if push came to shove, the government would step in to save them. But when Lehman Brothers knocked on the brink of bankruptcy, the government's response was shocking. On September 12, 2007, Lehman Brothers publicly admitted it was on the verge of bankruptcy, and if the government didn't intervene, they would crumble. Lehman Brothers, a bank with a stellar reputation and huge exposure to subprime mortgages, claimed it had its risks under control. But the reality was far from it. The market instability resulting from their imminent downfall created a panic that reverberated across the globe. Now comes the twist. President George W. Bush, a staunch advocate of liberal economic policy, decided to use Lehman Brothers as an example. His stance was clear. It was not the government's responsibility to rescue reckless investors. Over the weekend, the government stood by, doing nothing, letting the giant fall. On September 15, 2007, Lehman Brothers filed for bankruptcy, sending shockwaves through global markets. The demise of such a colossal institution revealed the true extent of the crisis. The government's decision not to intervene exacerbated the situation, transforming a contained real estate and banking crisis into a global financial meltdown. To put it into perspective, imagine the global economy as an intricately woven fabric. The Federal Reserve and the banks inadvertently started pulling at the threads, creating small holes with their actions. President Bush's decision not to rescue Lehman Brothers was akin to ripping a massive hole right in the middle. The result? A damaged fabric, representing an economy in shambles. Enjoyed this? Hit subscribe for more mind-blowing stories.